So no matter what Hayward says, there's still the matter of oil spewing into the Gulf and the government's reaction. The White House has imposed a moratorium on deepwater drilling in the Gulf, and House Speaker Nancy Pelosi has set a July 4th deadline for new legislation to deal with the spill and prevent future disasters. All bad moves, according to our next guest. Stephen Schork has been following the oil market for almost 20 years, including several as an oil futures trader. He's the president of the Schork Report, a daily newsletter serving major oil companies, utilities, and Wall Street firms. Stephen, good to have you back here on Street Smart and Bloomberg. So you say all of those moves, from Pelosi to what the White House, the moratorium, bad moves. How come?
Well, essentially, we're making a bad situation, Carol, and we're taking a bad situation. We're just making it worse. Look, I don't mean to poo-poo what has happened in the Gulf. It is a catastrophe. But then again, an airline going down with 300 passengers is a catastrophe, but we don't ground the entire industry. In fact, I mean, we know that the Gulf of Mexico, the oil and gas industry, the extraction industry in the United States employs over 160,000 people with high-paying jobs, a weekly average of over 1,400. That is more than double the national average. We're talking about an industry that, since the recession, has added 7.6% new jobs, as opposed to the general economy, which has shrunk by 5.7%.
All right, but just because you add jobs to the economy, does that excuse you for being negligent, which is possibly what could play out here?
Well, it could possibly, but let's not jump to conclusion about being about who's at fault here. I mean, clearly BP's at the fault, but let's look at the industry as a whole and the record that they've had for the past 30, 40 years of drilling. Now, you first have to ask yourself, why are we drilling a mile out in a mile deep in the ocean? Because we can't are forbidden from drilling in the shallow water eastern Gulf of Mexico. So you continue to push the envelope. And tragically, I mean, we had a situation, but again, this is one situation that in the past 30 years, I think it's a little premature to look at this one instance and say, okay, let's kill this industry, which is effectively what you're doing. I mean, we're getting a very muddled picture out of Washington. 2 months ago, the president of the United States embraced offshore drilling. He was ready to let it happen off the coast of Virginia. Just 2 months later, he's ready to bust a cap in Tony Haywood. Now, I mean, so we have a lot of volatility in this market. Now the Democrats want to raise the oil fund tax from 8 cents a barrel to 41 cents a barrel. We want to take the 75 million barrel liability cap. Yeah, Matt.
Steve, I mean, clearly it's a political issue, and clearly the administration jumps on it like really a ride at a fair. But the oil price hasn't been that volatile. I mean, if you say this industry's dead, and if you're so concerned about it, why are we only looking at $73, $74 a barrel for oil?
I mean, it's a fair question, Matt. And then you have to ask yourself, let's go ask our friends on Wall Street, why the heck was this market trading at $87 a barrel before Deepwater Horizon, and now we can't even break $75? It just goes and tells you how overpriced oil was when it was trading above $85 a barrel. So that said, look, back in the fourth quarter on Bloomberg television, Petrobras, the state-owned oil company of Brazil, went on record saying they are happy with oil between $45 and $65 a barrel. So that said, oil right now is $10 above value, according to a very large state-owned oil company. So that said, look, we've had 3 instances when this market has traded below $70, September, December, and January. In each one of those times, we've rocketed back up to the mid-80s. So the template is clear right now, Matt.
Bottom line, Stephen, Washington can't afford whatever they want to do to let gas prices go back up to $4.50 a gallon, right? So, I mean, do you count on that as your sort of get-out-of-jail-free card for the moratorium ending in, say, really ending in 6 months?
Oh, absolutely. If we're going into the Labor Day holiday, Matt, and we're paying more for our gasoline then than we are today, and if we do push this up over $3.50, that's going to cause real hardship to the economy, to the consumer, going towards the midterm elections. So it is a virtual done deal that if we are paying higher gasoline prices ahead of the election, this moratorium will be lifted.
I mean, it's safe to say, Stephen, as long as you, me, and Matt continue to drive our cars, I mean, everybody, we need oil. We need it. And you're going to continue drilling, whether it's on or offshore drilling.
Oh, absolutely. Look, we could all talk about alternative fuels, but at this point, all we're doing, let's look at the ethanol industry, let's look at biofuels or solar, what have you. We're being forced. We're taking money from the productive side of the industry, oil and gas extraction, and it's being forced out of that to the non-productive side of this industry right now. Now, that's not to say alternative fuels don't play a part and should play a part. They absolutely should, but it should not come. It cannot come at the expense of the one side of the industry that has, outside of Deepwater Horizon, a tremendous record in bringing product to the market cleanly, efficiently, and cheaply.
Hey, Stephen, you've been tracking this industry for a long time. 10 seconds, though. Safe to say this is a terrible and huge accident compared to what we've seen so far. Quickly.
Absolutely, but then again, it still pales into comparison what the Mexicans spilled into the Gulf of Mexico back in 1979. That was 3 million barrels. So this is bad, but we have a ways to go before it's a record setter.
All right, we got to run. Hey, Stephen, thank you so much. Stephen Schork of the Schork Group Inc.